nobody knows what President Trump is going to decide. But based on what we know so far, how devastating do you think this spat, this war, this dispute is going to be for U.S. companies?
I mean, Emily, the problem with this whole thing is we have no visibility. There's nothing about this trade war that makes any sense at all. We had this extraordinary, very symbiotic relationship with China that was based on a goal of giving consumers the broadest possible choices in product at the lowest possible price. And in that context, we overlooked the fact that there was a lot of industrial espionage and some clear manipulation of markets that was detrimental to some American vendors, but it worked out great for consumers. To me, it's okay to make a change in that larger context and say, okay, we're now going to optimize the needs of companies more than we are consumers. We're going to tolerate some price increases and all that. But that's not what's going on here. What we're doing here is self-inflicted. We're basically unwinding globalization. We're unwinding this really constructive symbiotic relationship without replacing it with something that we understand, know, and can plan for. And so I look at this and see nothing but downside. There, in my mind, I don't know what Huawei is going to do, but presumably this will engender competitors to Broadcom. And, you know, maybe it doesn't last that long, but people aren't going to look at trade with the U.S. the same way after this. They won't need to. They'll have more leverage for negotiating. And what a waste.
Right. The skeptics, though, would say the trade relationship with China has, for many, many years, been very unfair. They've been stealing intellectual property from the United States. They've been the benefactors of a massive trade deficit that the U.S. has suffered from. So,
well, Emily,
does something need to change? And could that change perhaps be better than the change that the administration is pushing now?
So let's unpack that, okay? The first part of it is demonstrably true that technology vendors in particular, have suffered a lot of industrial espionage. And some brands have suffered from counterfeiting, right? That's clearly true. And there's obviously been a prioritization of the needs of consumers. You go into a Walmart and it's what, 90% of the products are made in China at incredibly low prices. And so if we're going to move off of optimizing for consumers, that is totally rational. But you want to do it with a clear plan that everybody understands and that everybody agrees to, and that China understands that China agrees to. So I look on that part and say, I'm perfectly happy to have the conversation about re-optimizing for American corporations over American consumers. What I'm not prepared to do is buy into the nonsense that the trade deficit is a problem. I mean, that's what drives the incredibly low inflation we've had for so long. It's been about the fact that we have this really symbiotic relationship where we use our capital, our very high value currency, and we use our buying power to take advantage of the fact that China's invested a ton of money in infrastructure. If we want to change that, let's do it with a plan. Let's not do this with, knee-jerk activity that leaves businesses with no way to plan and consumers potentially with higher prices and no benefits.
So let's talk about Apple in particular. Of course, we know Tim Cook was meeting with the president this week. There's been this threat of tariffs looming on Apple products for many, many months now. It really hasn't hit Apple yet. That said, there certainly could be a sentiment change in China where Chinese consumers decide not to buy Apple products. Foxconn Hanhai has said that they could manufacture U.S.-bound iPhones outside of China, and you've got analysts out there saying that a potential hit has already been built into the stock, and if the trade war is resolved, then Apple could bounce back.
So, Emily, I think this is a really important set of questions, not just for Apple shareholders, but frankly for everybody in the tech sector, because Apple took a massive hit just a few months ago because the business in China for iPhones has slowed down really dramatically. And going forward, you have to believe there's no way it rebounds hard. It just, it's what it is. Smartphones are mature. They're not going to come back. Apple's best opportunity in smartphones is to convert from selling them at $1,000 a piece to having them be part of a monthly subscription where you pay $30, $50, $75 a month, get a phone with a set of services around it. They have the balance sheet to do that. I think that would allow them to gain a lot of market share. I think that's the single biggest thing for investors to look for. And I have no reason to believe it's going to happen or not happen. It's just, it could happen, and it's really a logical thing for Apple to do because it's so hard for Android to respond. Now, relative to Apple's other things going on, Apple's done a really good job of maintaining good relationships with the Chinese government and with our government. I think Apple's worked really hard not to be a source of conflict for anybody. But there's no way it can overcome the tsunami of a change in trade strategy from globalization to nationalism. And at the moment, we're heading in that direction. That makes me very uncomfortable.